Please accept our apologies for the delay. This is the first time we are having the event at this particular venue, and we probably overestimated our capabilities of in setting up the system. So we had some issues, and we are extremely sorry. And unfortunately, next two events will also be held in this venue, not at the workroom. It's pretty tough job to get a venue because people are getting married very often in this country, despite the though the population growth has been, kind of, curtailed, the marriage business hasn't really, stopped growing. So it is growing very fast. And as a result, we don't have venues, that many venues left. So thank you so much once again, and a very warm welcome to all of you joining us on the 55th edition of LBR LBO CEO FORUM. And a very warm welcome to our sponsor, Sri Lanka Telecom Mobitel, who is joining us from today's event as the platinum and title partner of all the LBR LBO events, that's CEO Forum, CFO Forum, Summits, and LBR LBO Debrief on economic outlook towards the end of this year. So thanks once again, and a very warm welcome to our friends from AIA, our gold sponsor of the event for the 55th time. It's my pleasure to welcome our speakers. We have eminent personalities from public sector and research, tackling a very tough, very interesting, very topical subject. Before I move on to introducing our speakers and the topic, let's pay attention to messages from our sponsors. Sponsor commercials, please.
LBR LBO CEO Forum.
Platinum sponsor.
The happiness of coverage. The happiness of connectivity. The happiness of adventure. The happiness of being free. The happiness of endless joy. For unlimited happiness, Mobitel, we care, always.
Gold sponsor.
Never stop loving. No matter what happens in life, we believe in never giving up on what's important to you.
AIA Insurance, the real life company. Media agency partner, Media Factory Group of Companies.
Print partner.
So we thank Sri Lanka Mobitel, being a title and platinum partner, and AIA our gold partner, and our media partner, media agency partner, Media Factory Group, and a print partner, Corporate Image. So in the interest of time, I'm going to skip the traditional opening remarks. Let me now introduce our speakers. To my immediate left is Himali Madhusinna, CEO of Lanka Market Research Bureau Limited. Himali will be making a very brief presentation on emerging consumer consumption trends based on LMRB household panel during the last 48 months, during the last 2 to 4 years. We will have then Amal Sandaratna, a very well-known economist, Amal will talk about what lies beneath the GDP and other macroeconomic indicators, and he will try to shed some light how we should interpret, how we should look at these numbers. And then we have Priyanti Fernando from SIPA. So Priyanti will discuss about some emerging signals, social signals, what you observe in the contemporary society. Following these three presentations, we will engage Stephen Inderby, Group CEO Director of Hemas PLC, Chana De Silva, Group Managing Director of Delmage Group. Chana, as I'm sure all of you know, has an illustrious career in both the public sector and private sector. We also have Arjun Fernando, CEO of DFCC. And today's moderator is a very well-known public policy critic and founder chair of Lanesha, Rohan Samarjiva. Please welcome our speakers. Thank you, and over to you, Rohan.
Good evening. You're going to hear a lot of numbers in the next little while. And the point about these numbers, these indicators, is to give you a picture of the world. Not the world that you live in necessarily, but the world that your company does business in, or people like us make public policy for. So I think you have to always ask the question, what are these numbers telling us? Because by definition, these are incomplete. They do not describe the world fully. They have their errors, they have their biases, and I think we'll need to look at what they are telling us and what they are not telling us. So with that in mind, we'll ask Himali to make her presentation. We'll have three presentations, one after the other, of 10 minutes each, and then we'll have a discussion with the panelists, and we'll bring you into the conversation at that point.
Good evening, ladies and gentlemen. In this presentation, we'll be looking at data from the LMRB household panel. So let me quickly give you a brief introduction to what LMRB panel is. Let me, I will change the computer so I cannot find the download button. Let me check and see whether this works, otherwise I may have to, fine, thank you. Okay. LMRB panel, we started operations in 1988, and as of now, we capture about 40 branded categories. Here, what we are going to look at is our branded information. Now, currently, actually 2012, we extended the panel to the north and east. However, this presentation, since we do not have data to compare, the back data is not there for the north and east, we'll be only looking at information excluding these two regions. So if you look at the branded categories that we are looking at, broadly there are two segments, the branded food segment and the personal and home care segment. The time period that we are also going to look at is actually the wet period. That's because the latest data that we have is for April 2014. So we are looking at May to April period. So in some of the slides, you may see January to December. That's again for comparison reasons. So for example, if we move on to this next slide, here we have looked at Jan to December and comparing with the GDP. Clearly, what we have seen is with the GDP growth, we have seen value of these categories also increasing over time. However, if you look at the values, what we have seen is from 2012, while the GDP continued to grow in 2013, that correlation, the direct correlation that we saw earlier is not being observed. So in 2013, we see a decline in volumes. Okay. Here again, we have looked at 4 periods, 4 years starting from 2010. This is the post-growth period that we observed. Clearly, we see the values growing. You can also see that there is erratic movement in value growth. That's because there had been price increases in 2012 and 13. Therefore, we actually in 2013 saw a 60% almost value growth in these FMCG branded categories. However, when we look at the volumes, the way we see there is a decline over time. And specifically in the branded food categories, latest, that is the current year, this is May to April this year, we see that food categories have reported a degrowth, while there is marginal growth in branded and personal care categories. So here what we've done is we've looked at a few categories. I know there are quite a lot of numbers here. Here again we've taken the base period as the post-war period, growth period, which is 11 versus 10, against 14 versus 13. So what you see first, the first column is actually the value growths that we are seeing in this list of categories. Most of the categories we see value growth, except for milk powder. If you notice that there is liquid milk that is growing significantly, therefore we see a decline in milk powder, but a growth in liquid milk. However, in the rest of the categories, there is clearly a degrowth or a retardation in growth in volume. Okay. So similar patterns also observed for both personal and home care categories. However, the rate of decline for personal and home care is still, it's not as high as food, but still we see the same pattern when you compare the values against the value growth. Okay. Yeah. Let's now look at consumption pattern across SECs. Now here we are actually looking at, we have classified the households by socio-economic classification based on the education and occupation of the chief wage earner. In market research actually what happens is when we go to respondent and ask for the income, there's always an underclaim. So most of the time the information we get on income is not so accurate. Going by education and occupation, actually it's a better measure of segregating people, while there is also a direct correlation between the socioeconomic classes and the income. So according to LBR SEC classification, these are the 5 SEC groups that we have, and currently SEC-A, just to stress the point that the B's and the E's, that is the skilled blue and the unskilled workers, the lowest group constitute closer to 40% of the, actually about 40% of the, 45% of the population. While Belgium is about 30, and we have about 8% in SEC-A. And also please do keep in mind when I say SEC-A here, this is a mass market panel. So that super rich areas are not included in this panel. What we have is if you look at the state and average income, if you look at in this group, A's is about household income. What they claim is to be somewhere around 65 to 85,000 rupees. So please do keep that also in mind, but definitely we do know there is an underestimation. So here, if you look at the average annual spend per household, this is we have again looked at from 2010. Over the time across all SECs, we've seen and increasing spend on personal and home care products. However, if you look at the spend on food categories, you see there's a significant increase across all SCs, despite the fact we saw earlier that the values, the consumption across SCs also have come down. So the value growth by SCs, if you look at, you see this middle group, that is SCCC, there is a 1.5% decline, so it is more evident while there is decline taking place, the decline is more evident in SCCC. And if you split this information by branded and home care, you see across board the decline is evident in food consumption. What is interesting is if you look at the non-food, that is home and personal care here, actually this what we see is driven mainly by personal care. We see that there is a growth actually taking place among the most SCC groups. Their consumption is actually increasing at a higher rate than the A, Bs and the Cs. And also, what we see is, this is based on LBR, the National Media Demographic and Media Survey, where every year we collect the durable ownership. You can clearly see that the ownership of durables has significant increase in ownership of durables among the other SCCs. Look at color TV, mobile phones, electric irons, rice cooker. So these are all now entering the lowest group. So there is clear evidence that the living standard of these SCCs also going up. And also, what is also interesting to see is why we in this panel branded categories, we have a definition of essentials or necessities, or they are defined. But for these SCCs, most of the regularly purchased food items are being controlled by the government, the prices. So therefore, the impact on them is quite low. Because if you really look at when we observe this declining trend that we first saw as non-essentials as we call it, or we define it, jams, cordials, there are categories, butter and margarine, the penetrations and value coming down. But if you look at the regularity of purchase in a given month, even if you take butter and margarine, less than half of the population purchase on a regular basis. So these categories hardly enter these households. So the categories that they consume actually, these prices have been controlled by the government. So to summarize, what we see is the branded FMCG items are seeing a decline in consumption, and the decline is more among branded food categories. However, the different, when you look at SCCs, there we see differences, and the greatest impact being felt by the SCCs or above AB, and not so much the lowest SCC groups, that is D and E. Okay, thank you.
Thank you. We'll now have Amal Sandaratna from Frontier Research giving us more of a why these phenomena are existing rather than a how, which we heard quite well from Himali.
Good evening. particularly after the war ended, a lot of our clients had a very optimistic view on Sri Lanka. Their projections, double-digit GDP growth, per capita GDP going to keep doubling every couple of years, and very optimistic views about how business would be. And consumption patterns, demand for the first 2010, 2011, definitely a lot of businesses saw a big improvement, just as you saw in the numbers. But after that, as you all know, and which is the puzzle, which is the whole title of the presentation, GDP has continued to do very well. We had probably the second fastest GDP growth in Asia in 2012, 2013. Even though it slowed down a little bit in 2012, it actually accelerated into 2013. Second half of 2013, we are back to 8% kind of growth, which are very good GDP growth numbers. But consumption is crumbling. So why? I've never particularly liked predicting GDP or being asked to give a view on GDP because I've never really seen, you know, GDP is a bit of a complex topic. So using GDP as a way of explaining something didn't make sense, but it's so popularly used, per capita GDP and the aggregate GDP number, that everyone wants this number. And so when it's not working out, you have a problem. So now I just try to do a little bit of a economics lesson and explain what GDP is, the kind of way you can look at GDP that may help you understand this. Apart from, I mean, I'm not getting into the topic, and I think if you can understand this, you don't need to really get into the topic of whether it's actually fudged or whatever. But the question is, looking at the actual GDP numbers, trying to explain what's happened. Now, GDP is a very aggregate number of lots of different things. To try to explain what matters in your business, you should actually try to pinpoint the aspect of GDP that matters to you. And here we will try to look at consumption, but I would argue that, and those numbers are not available, you need to look at it at even more micro level. But in a simple way, GDP, how you calculate GDP, in what is known as expenditure, of course, again different ways of calculating in GDP, is consumption, private sector consumption, government consumption, investment, both private and public, plus exports, less imports. This is the equation. I think most of you who have done some economics would have seen this. This is like A-level, whatever, but then we forget it because in Sri Lanka, the GDP that's reported is agriculture, industry and services, and this number is kind of like hidden. It's only given once a year. The agriculture, industry, services, I mean, we got the first quarter numbers, is the one that's highlighted. Now, clearly, if you're trying to understand what's going on in consumption in Sri Lanka, you should understand what's happening to private consumption growth. Okay. Now, trying to break it down into real terms, the numbers that are given, the official numbers, give you consumption plus government consumption together, private and government consumption together. The real numbers for both together are a little bit harder to get. So, using actual data, we look at what happened to consumption, both private and government. 2013 saw the worst number in terms of growth since 2001. It was worse than even 2009. We had a recession time, any downturn. So, you know, when you go back to 2001, you remember 2001, overall GDP went negative. We had the airport getting bombed. We had a massive depreciation in the currency in early 2001. A very, very bad year for those who remember that. So, from an aggregate GDP point of view, the consumption number was worst. It was just a little bit, you know, you did not have a number as this bad for the last 14 years. Okay, and this is, you know, official numbers, so to speak. And if you actually look at, like I said, this includes government and private sector consumption. In 2013, if you look at, I mean, it's difficult to correlate it historically. 2013 saw improved government consumption number, while private consumption within this was actually bad. So private consumption, in fact, would have been probably worse. So this is the graph of this thing. Yeah. You can see the 3.2% real growth rate, which was the worst. I mean, even 2009, it was 3.6%. Now, why this is puzzling to someone is usually in most years in the past, when you see GDP going up, consumption actually is a multiple of that. That has usually been the case. So, for example, like I told, post-war 2011 and 10 were good years, 2011 in particular. So if you look at in the past, the red line shows the GDP number you work with, and the blue, the consumption number, both from the same series, government numbers. 2011, where everyone was buying motor cars, TVs, all the things were doing very well, the immediate post-war growth, you had a consumption growth rate of double digits, 12.9, which is extremely strong, far stronger, in fact, than GDP growth. And generally, you see, good upturn in GDP leads to a stronger growth in consumption in Sri Lanka. But you can see the relationship breaking down completely in 2013. So that's why everyone is, in a sense, puzzled by this. So now, why is GDP doing well? Because normally for GDP to do well, you have to have consumption growing well, the calculation of GDP. Why is it? The other two components did very well last year in the numbers. The exports minus imports. Now again, imports have also not been doing bad. And if you look at a consumption point of view also, these are all related. A lot of the businesses that are suffering are in effect importing things and selling to the consumer or adding a little bit of value. And so imports have been falling and doing quite badly from last 12 to 18 months. So imports have been falling, which is actually very good for the GDP statistic when imports fall. While exports have essentially been rising. Exports as in service and goods exports. So this would be that net exports growth rate, the contribution to GDP. And you can see since 2006, this was actually the strongest number, led a lot by falling imports. Again, falling imports reflecting falling consumption, but good for GDP, but not good for an importer in the economy who is not seeing his products or his goods doing too well. And the impact to GDP from investments was a little bit better in 2013, not either the best year or the worst year, but that government spending, the buildings, the hotels being built, the highways being built, continue to contribute to GDP. And again, if you look at investment, you can have a question of whether investment is productive or not, but if money is spent on something, that will count in the investment statistics. Okay, so that's it. Now there is a positive side to this story, not for most of you all, or most businesses, because consumption is what drives businesses, but we've often, the consensus view on Sri Lanka by many people is that we don't save enough. We need a high level of investment in this economy. We don't save enough to fund our own investment needs. Therefore, we need to either borrow or get FDI from abroad. Getting FDI from abroad seems to be very challenging. So then we end up borrowing to meet the investment needs, the capital needs of the economy. So how are we going to do this? We have to get our savings up. Well, to get your savings up, you have to cut your consumption. So the other side of the story, you can look at it this way, the consumption being down and depressed, is you could maybe think that we have actually been consuming too much and we are kind of now getting used to, a much tighter environment. We are saving more, and it's of course not a choice people have made. If you look at why we are saving more, what it is, you had the impact of the electricity price hikes, you had the depreciation of the currency, you had all our consumption, that's actually a very big factor, fueled by pawning related loans which no longer are really available, which you've been cutting back on. So now you need to stop borrowing and start saving, and that's what's happening. So our savings rate in Sri Lanka actually in 2013, with consumption going up, has actually increased a lot. And this is aggregate savings, just to keep in mind. Again, you can look at this and think this is savings. You have to understand this includes, when we say savings, includes private savings as well as the savings or dis-savings of state-owned enterprises. So in the past, state-owned enterprises made losses, very significant losses, which cut into private savings. Now those losses are less because of the electricity price hike, which helps aggregate savings in the economy. But remember, to do that, there was a massive increase in our utility prices, which cut your consumption. So all this cuts through in many ways. But that is what has led to what we call the savings investment gap. If you look at the blue line, that's the level of investments you have and the savings, and that gap sometimes runs very high, which leads to high current account deficits. now is relatively lower because our savings are higher. So that is a quick snapshot of what has been happening in terms of understanding the numbers. So I mean, we can get into why consumption, why this whole adjustment happened, why consumption crashed, and why savings went up. And I would say the three factors are, you know, we were living off our means because of pawning related loans, and now we are understanding the big impact of that. We were living beyond our means because, you know, we were getting electricity and utilities at a cheaper level overall, aggregate economy. Then, I mean, we're not talking about the high income groups, but at an aggregate economy level, then the cost of production of it, which got adjusted. And then the crisis in the economy that happened early 2012 led to adjustment in interest rates and depreciation we are probably still suffering from. But this is the adjustment that was probably needed. So we are tightening our belts, having less consumption and learning to save. Question is how long that lasts for. Thank you very much.
Thank you, Amal. Now, from a more public policy perspective, we have Priyanti Fernando looking at the emerging signals, the sort of the big picture of these issues beyond consumption.
Okay, good evening, everybody. Actually, I work for the Center for Poverty Analysis, and I think that what I'm trying to bring to this forum today is something a little bit more of the reality of the people I work with, and what is the social context in which all this consumption reduction, the increase in savings, all that is actually happening. So in a sense, the topic given to me was about emerging social signals. So I think there are some very positive signals, there are some warning signals, and in an economy that is changing so fast, I think there are some stresses in the social fabric, and I think it's these things that I want to talk about. The positive signals are very positive. There are very good headline social indicators. We have achieved many of the MDGs indicators. We have universal primary education, life expectancy is high, maternal mortality and infant mortality is low. It's the lowest in the region in South Asia. A lot of the births happen in assisted by health personnel. And of course, people always ask me this question, income poverty is decreasing, and quite dramatically. By 2012, it was about 6.9%. And also, if you look at the poor households in 2009, it was they are not that badly off. There's 80%, 88% live in single houses. Only about 3% live in slums. Only 1.5% of the poor people live on encroached land, so they'll have land that they have either leased out or they own. The houses are not too bad. Many of them are permanent. 65%, I think now the figure in 2012-13 is about 95% have electricity. Some of the poverty, of course, is driven by the fact that the heads of households have fairly low education. The central bank has also done a prosperity index, which in a sense actually reflects some of the trends that we were talking about. I'm not going to go into the calculation of it because I partly don't understand that. But from that index, it is also obvious that the prosperity is increasing. And the prosperity index is based on the economic and business climate, the well-being of the people, and the socio-economic infrastructure, and all those have an upward trend. So that's the good news. There are several warning signals. There are probably more than this, but these are the ones that I will touch on this evening. The main warning signal is inequality. There are a number of different kinds of inequality. There's household income inequality. And again, in a way that I think reflects a little bit about what Himali said about the E and D groups. Everybody's income is growing, but the income share of the poorest 20%, that's about half of Himali's E and D category, SEC category, is actually declining. What you have here is called the Gini coefficient, which in social science terms is what measures the amount of inequality, and that has remained relatively static. The higher the number, the more inequality there is. So in the urban sector, the inequality seems to be growing again. And this is in the context of poverty declining. There's also regional inequality. The Western province, despite all the attempts to sort of deal with lagging regions, the Western province contributes 45% still of the GDP approximately. And there's marked difference between poverty in the different provinces. These are 2009 figures. And you can see that in the Eastern province and the Uva province, the poverty ratio is quite high. Poverty has actually increased in the Batticaloa district. We also think that the way we calculate poverty, the urban poverty may be significantly underestimated. And even if you look at the prosperity index, you find that most provinces don't have a prosperity index of more than about 75% of the Western province. So there's significant disparities, regional disparities. There's also lifestyle inequalities. This is the use of bicycles. On the left, you see people using bicycles for their own work, their own transport. And on the right, you see us using bicycles here in Colombo for leisure. So there are many lifestyle inequalities. I don't need to elaborate them here. There's also gender inequalities. Now you wonder why that matters, but women are half the Sri Lanka workforce, and even though the health indicators are very good for women, the labor force participation is around only about a third, and that has been static like that since about 2000, year 2000. Women are twice as likely to be unemployed than men. And of course, women's political representation is abysmal compared to the rest of South Asia. We have less than 6%, irrespective of the fact that of our great sort of achievements in having heads of state who are women. The other very concerning social trend is youth unemployment. I think some of us will remember when youth unemployment led to very sort of violent insurrections, and the youth unemployment figures for the 15 to 24 age group is quite high. And this is a picture from Alutkama. You can see that there is a lot of male youth unemployed sitting there and cheering the mobs on. The other issue that we have, and which will affect our health provision, is the growth of NCDs, or the non-communicable diseases. This also relates to the fact that Sri Lanka has a growing aging population. So therefore, deaths due to circulatory diseases are increased from 3% to 24%. So that's a large amount in the last, I think, 4 or 5 years. Mortality rates have from NCDs are currently 20 to 50% higher in Sri Lanka than in developed countries. And the incidence of NCDs, interestingly, varies between rich and poor. So the rich people are, or the higher quintiles are getting heart disease, and the lower quintiles are getting asthma. And the decrease in infectious diseases is actually a sign of the fact that our social indicators our social system is getting better. Despite this, of course, there's a non-communicable disease unit of the Ministry of Health Care and Nutrition, and they advocate very strongly that we choose fruits and vegetables of unhealthy fatty food, which of course is completely contrary to the market, which is actually promoting things like McDonald's. Malnutrition is, I think, the sort of scandal of Sri Lanka. Despite our high indicators, we have very bad nutrition rates, and the impact on food systems of the poor will come from climate change, from which will continue to impact on agriculture, water resources, energy and the environment, and fisheries. Also from increasing food prices, And this will also lead to possibly to increased malnutrition. But as you can see from the graph, the poorest quintile has a very high level of malnutrition compared to the others. I would like to just say a little bit about the stresses in the social fabric. In the last few years, we've seen some of these things happen, and I just want us to think about it while we go into the discussion. Firstly, we've had these protests. These are fishermen in Negombo protesting against skyplane landing. We have had the infamous Valiveria protest. We have had FUTA. We've had students in Matara protesting recently. These are all indications of stresses in the social fabric, and there are many more. Child abuse is on the increase in Sri Lanka. Child rapes have increased. Sexual offences have increased quite dramatically. And also gender-based violence. Survey at the OPD in Ragama in 2009 showed very difficult to get proper statistics on gender-based violence, but the survey showed that 40% of the women who came into the OPD were beaten by their partners. That was in 2009. There are also stresses in the social fabric because of land laws and evictions, land grabs and evictions, and sometimes with disregard to the law and to policies that exist in this country. So here we have Somavati reservation, the conservation area, which was cleared. Some acres there were cleared for growing bananas, contrary to the conservation law. And here we have what we are all very familiar with here in Colombo, the Java Lane evictions, which are possibly contravene some of the national involuntary resettlement policy principles. And finally, rather sadly, to end, we have religious clashes and the rise of extremism. We can't discount that. We can't hide it, throw it under the carpet, because it is something that is very much real in our society today. Thank you.
Thank you. Let me move on to the questions. First, to both Himali and to Amal. Are we talking about 2014 or are we talking about 2013? I think that's a relevant question because there are some studies that show that we are coming out of the trough. So what is your view? And Amal, all your data were from 2013. What is your sort of guess, I suppose, about what's going on now? Himali?
Yeah, the data that I was looking at is actually up to April 2014. If you look at the trends, what we've seen is, yes, there was this boom, post-war boom, and in 2012, with several policy changes, we saw the trends coming down, consumption. However, we also saw a certain pickup again taking place towards the end of 2012, maybe the first quarter of 2013, and 2013. And that sometimes we see that seasonality. However, again from 2013, we've seen this continuous declining trend. And if this is what you are going to, so up to now, this is what we have seen, and we really don't see a recovery taking place as of now. What we are seeing is, usually what happens is, as I mentioned earlier, we have the essentials and the non-essentials. First, according to our definition, I want to stress, first we see the non-essentials coming down, and very rarely we see the essentials like the milk powders or the other certain categories. We hardly see degrowth happening. The powder, milk powder, there is a crisis situation as of now. But what we do really, this is 2014 up to April, and what we see is a continuous declining trend. If that is what.
Yeah. So I'll keep that. Build up a little bit of suspense on what Amal has to say. We have to go to commercial. Somebody's got to pay the bills. So hang on and don't tune out. go back to questions? Okay. Well, Amal, you had more time to think. Are we in the trough or are we coming up?
Okay. Can you hear me? Is it working? Okay. The numbers I showed you, the charts and all that I showed you, what you call GDP numbers using the expenditure approach. So there are no numbers on that basis after December 2013. There's also GDP numbers from what you call the production approach that has been released for the first quarter 2014 that has anyway not been very useful at all in terms of explaining what happened in 2013, 12, and definitely not explaining anything in terms of 2014. We find that approach, the numbers, you know, for example, you find construction growing up, but cement companies showing reported sales down, so it's a bit difficult to work with, and that's what we try to find, the numbers that help you understand your business. That's what we try to do rather than the numbers that don't help you. So that's not useful actually in terms of understanding what's happening this year. The government, the CBS has said that they were going to give what that expenditure approach this year, but they still don't seem to be on a quarterly basis, but that has still not happened. In other economies, more advanced economies, you'll be getting that on a quarterly basis. When that happens, it will be quite useful. So that's the GDP numbers. The other set of numbers that we work with ourselves are looking at corporate results, listed company results, how the forward guidance or how corporates are doing. And in aggregate sense, you do not see any recovery. Numbers up to March are available. What people are talking annual reports. You know, you don't, well, not sometimes annual reports tend to be very positive, but when you do talk to corporates, it's sometimes a bit different. You don't get any sense that business is seeing very much, if any recovery, it's very small. It's nothing big yet.
So let's ask Stephen, you're in the FMCG business, except I think your sector might be more personal care, health, those kinds of things. But I have a sort of a sub-question for that. I'll come back to that. Is that a smaller base that we are working on, rather than as part of your basket?
Yes.
It's smaller.
Yes, actually, sorry. The food takes about 75%, so the risk environment personal is about 25%. Yes.
Stephen.
Okay, yeah. For us, our primary areas of activity are in the consumer goods space, personal care, and within healthcare, both hospitals, pharmaceutical manufacturing, and pharmaceutical distribution. And I guess as we think about this, and you look at the data, I mean, I sort of come out in a place where I sort of think to myself, this is an issue of income, not an issue of consumption. Because unfortunately, we can't go into a shop and spend GDP. We can only go into a shop and spend the rupees that we have in our pocket. I believe there's been a number of events over the last year that have taken quite a few rupees out of the pocket, whether those be electricity price rises, fall in the price of gold and the implications for pawning, very low interest rates, and those that were reliant on interest income as a source of income. So I think there's been quite a squeeze around income. So I just don't think the spending power is there. And as we look at the performance of our business, which has actually been very good through this period, we've both our pharmaceuticals and our consumer businesses have grown at more than 20%. Very different to the overall macro data that we're seeing. I think it's a statement that now, in a consumer's mind, everything's about value. Everything's about the move to trusted brands, because I'm not prepared to take a chance with something that I don't really know and understand. So to me, all of the indicators are that we've got quite a tight income situation at the moment, and it's going to take a bit of time for that to really sort of trade out of the system.
But for those in your space, which is health, personal care, things like that, it's not a very bleak picture. That's why I began by saying, you know, all these indicators tell different stories to different people. It's not the same picture for everybody.
I wouldn't completely agree with that view.
Okay.
I mean, I would say that when you look at personal care, you say 9% growth. Personal care overall, 2013-14, 9% growth. A big chunk of that's from price. There's not a lot of volume growth there. You come down to food, and I think you see the split between essentials and non-essentials, and you see non-essentials really getting squeezed, 5% growth. There is a perversity, I'd agree, that on the pharmaceutical side, we're seeing very low growth indeed, 1%, 2%, and really no volume growth at all. So can I reconcile that range? Why are people spending more on personal care, less on food, and even less on pharmaceuticals? I struggle. But to me, the overall message is one of a tight environment where consumers do not have considerable purchasing power.
There are some other indicators that, for example, Priyanti pointed out, which is about lifestyle diseases, non-communicable diseases. I mean, obviously, we don't want people to be sick, but does that also mean something very bad from a commercial perspective? Channa?
I don't know. Firstly, as a human being, the other day I saw a young child, aged about 3 years, being injected with insulin, and my heart sank to the ground. And when I asked the mother, and in this case, an expat of a very high profile, when I asked the mother, she said the child has to be monitored all 3 meals and insulin being injected in all of them. And, and I think that was not an exception. And, you have a growing trend of, children getting into diabetes of a very young age. Never heard in Sri Lanka before, leave alone adults. And the adults numbers are staggering. It's staggering. And what is very unfortunate is most of the people don't know that they're sick. And that is, I think, a combination of what we eat. What we eat is what we are. And that is very disturbing. And of course, the high level of stress which comes out of work environment is very stressful, probably. Altogether, you finally end up with high disease numbers. I think Priyanti alluded to some of it. And I think that is going to be a very huge challenge for Sri Lanka in the going years. In terms of pharmaceuticals, from a commercial end, as long as people fall sick, there'll have to be medicine. And there's intense competition in the industry for medicine. Some of the segment is accused of being very unethical, and regulations at various moments have been, regulators have been accused on various offenses. Tampering on expiry dates has been a recent phenomena. Some large groups have been accused. All these are not very healthy for a nation which is aspiring to really lead a continent, and these are disturbing. So I think, from policy angle, we need to step up and see what is good for the country, what we should do as a nation is prime importance to all of us. Whilst we pursue our interest in every industry that we are involved in.
I think this is a very controversial subject. We'll get you thinking about it. We'll get the panel thinking about it. But again, we'll take a little break so that you can see the advertising. This time the sound is supposed to be fine.
LBR LBO CEO Forum.
Platinum sponsor.
Mobitel Business Solutions. Accelerating your business.
Gold sponsor.
AIA Insurance, the real life company. Media agency partner, Media Factory Group of Companies.
Print partner.
So this issue of healthcare, personal lifestyles, etc. I mean, it's in an odd way when non-communicable diseases overtake communicable diseases. It is almost a sign of development. But when you hear the stories of 3-year-olds being on insulin, you think that there's something really wrong. Now, I've been looking at the numbers that the government puts out And I've seen rice consumption going down, flour consumption going down, bread consumption going down, sugar going down. All these things are going down according to the government's data. Now, I was just talking to my friend Shaheen just before the session, and he says, well, that may not be, I was thinking these are good signs, right? These are all things that cause lifestyle diseases. That may not be a factor. People may be eating out, but instead of eating at home. And that is why the household consumption of these items is going down. So it seems that this story that we are seeing from the numbers is more complex than it appears on the surface. In the same way that some of the other indicators are simply, some of the health indicators are because we are living long. So if you look at cancer indicators, etc., it's just because we are living long, we are seeing these things. In the 1940s, when our average longevity was something like 40 years, 44, I believe, and men living much longer than women, unlike now, I'm sure the cancer rates were negligible because people died before they got cancer from something else. So there's some real complicated issues around this. Would any of the panelists want to comment on the health, lifestyles, consumption issues? Is it that we are, as Amal put it, we are tightening our belts, we are sort of living more reasonably and more prudently, or are we suffering?
Maybe you can talk about health, I can talk about lifestyles. As I mentioned earlier, now we do know, though we don't have data here to support, we do not capture the very rich or the super rich in this data panel. But we do very clearly see that there is a bipolarization taking place. What I mean by bipolarization is, when you look at the lifestyle stores that are being opened up, or the luxury vehicles that you see on the road, or the leisure, that's the industry that's booming, very clearly there is a demand taking place there. While there is also these lower groups actually moving up to a mid-tier level. So in those two ends, clearly different kinds of demands are there, but however, the mid-tier is where the issue is. So just to answer, because you mentioned lifestyles, I thought I'll bring that up because very clearly we see growth taking place in that very high-end niche segments. And there's a lot of premium products that we see out there. But only thing, their per capita consumption may be quite high, but overall the percentages, fraction may be just 1% or less than 1% of the population.
I think your friend who said, you know, they are eating butt packets. It's probably also true that we are eating a lot more pastries. I mean, I see children going to school near where I live to Royal and Thurston and all that. They're always buying pastries before they go into school. So I think those are, but I also think there's a lifestyle expectation. I think we have created a kind of lifestyle expectation that maybe the lower ranks can't really reach at the moment, and we're tightening belts maybe, but that maybe we have that expectation still exists. So we would rather eat a pastry than bring, I don't know, something from home that is whatever. Also, we have a life, particularly in Colombo, where we can't cook anymore at home. I mean, there's no time. There's a whole time stress. So I think the whole pattern of consumption, if you want to call it, has changed radically from over the last, particularly over the last 10, 20 years.
How do you see that with the low labor force participation rate of women in the country? I mean, if that was high, we could definitely see there's no time to cook. But is that a factor in the equation?
Yeah, I think women, well, yes. I mean, I don't know whether the low women participation rate just means that they are not, that is a conundrum, and I don't know the answer to that. But I do think that the low participation rate of women is not necessarily confined to low participation in these areas where women don't have opportunity. I mean, it's not in the same areas where there is lifestyle changes. So there's low participation in the agricultural areas and stuff like that as well. But I don't really know the answer.
I think you see these numbers coming up. We will be taking questions, SMS, various other means. If I can see you in the dark, we will take questions from the floor as well. So do think up the questions. Let me turn to Arjun. What is the role that the banks are playing? Savings rates are going up, bonding rates are going down. Are you contributing? Are you benefiting? What's going on?
Yeah, just on the consumption side, just a point I'd like to make here on financial inclusion and if the banks are playing a role. There was a recent study done by IFC which says although we are high compared to our South Asian neighbors, only 70% of the population have bank accounts and only 83% of households have bank accounts. And at the bottom of the pyramid, 40% do not have bank accounts. And even with the people who have bank accounts, the number of inactive accounts are around 14%, and the number of transactions, just one or two for a month is 70. So all that tells us that as a banking community, we have a role and responsibility to have more financial inclusion. So there's an opportunity as well. Just on the other side, I believe the challenge for the commercial banks today with pressure on interest margins, the cost base is becoming very relevant, and we are looking at our branch network, whether it can sustain the cost. So all these are sort of factors, and what we are seeing on our consumption loans is that while the rates have come down, the demand is still not as high as we would like to. I think that goes back to what Stephen said, whether we have relaxed our credit requirements because of the high liquidity, and we still are not seeing the growth we would like to see, especially on individual consumption. So these are sort of the challenges we are facing in the banking sector.
The other area, while we wait for some questions to come in, is the whole question of white goods. I read from your studies that people are getting into sort of white goods, electronic equipment, TVs are, they're competing with mobile phones in terms of who gets to 100% first. I believe refrigerators, according to the government numbers, 60% of the households in the Western province have refrigerators. You had numbers on, I think, rice cookers, electric irons, things like that. So where is the money coming for that? Do you notice, is that over the 4-year period that it has been increasing, or is it increased in 2009, 2010, and is now dropping down? Because if people are tight for money, how are they doing it? Or is this a Middle East effect?
The Middle East effect is there throughout, no doubt about that. But this is what we see is obviously with electrification. Now I guess it's quite high. And also over the years, we've seen a lot of easy payment schemes coming out. So definitely there is a difference now in people's difference between what is discretionary and what is not anymore. So these have now become necessities over time. To answer your question, we've seen this gradual, there hadn't been a slowdown. These are increasing gradually over time, over the years.
They're increasing or they're slowing down?
The ownership of
these items.
Ownership of durables is increasing over time. Okay. Yes.
But what you're seeing is FMCG going down.
Yes, yes.
Isn't that a kind of mysterious thing, Amal?
No, if you look at durables, it's kind of different there. Durables is the ownership of durables. It's what do they call it? It's the stock item, while FMCGs are a flow item. So it's kind of a different thing. What you should be looking at to make the direct comparison is the rate of increase in durables. How much are you spending on your new durables each year? Because durables will always increase. It's going to be someone will actually, but it's just that how many people can add a new fridge each year. The second thing in looking at these things and thinking about this is the longer term trends, which are the 4-5 year effects, the increase in durables, where you get, for example, I think the durables data ends in 2013. While that's one aspect, sorry, the one aspect is when you look at the longer term trends, the diseases and all that, which you get longer term data, every 4 year kind of data, trends in consumption, as against the more shorter term data or whatever perspective you have, the big consumption drop off that probably started from early 2013 onwards, where there is less data available, but what everyone feels. So they are kind of different against a trend of consumption overall going up over like a 5-10 year period, the more recent downturn, and trying to figure out what's going on there.
I have a very interesting question from the floor. I think you're the one to take this one. Italy and Britain have added drugs, I think, right? Not dogs. Well, dogs too, and prostitution to their GDP calculation. Should we include them? Because there was this long, big debate, right? Whether we include alcohol and bad things in the price index. Can you remember that? So I think my argument was that one has to be consistent in these matters. If we can get the accurate numbers for prostitution and drugs. This is not my question. It came from the floor.
Actually the real question is, what do you want to use your GDP for? What's the purpose of using GDP? What does it mean to you? You know, that's the question you need to ask. What's the purpose you're using GDP? I mean, I was thinking about something else. I'm not. Maybe I get back to the question. You're talking about eating out. If you eat if you cook a meal at home, that's not going to be counted to GDP. The effort that's put into that. That's well-known fact. If you go out and somebody else cooks it, or the person who cooks it at home actually goes out there and charges you for it, it will be counted to GDP. You're eating the same thing, let's say, but it's just the way it's calculated, and there's so many flaws with GDP that you have to figure out why you want to use this GDP. Whoever is using GDP has to first tell me, why do you want this number, and then I'll tell you whether the number including this or not is relevant or not. That's what I first you have to figure out what are you using GDP for, because people use it for.
Is there anything that the private sector can use GDP for? I mean, I can understand a different question for public policy, but for the for the private sector, is it irrelevant?
The broad GDP number. I'd spend very little time with that. The overall GDP number, I really wouldn't. You know, as an economist, you know, I'm supposed to predict this, and I tell people, you don't use this number you want me to predict it for. You've got to work with, you know, for example, the consumption number. That may be more relevant to some industries, but even that, you'd use it with a lot of caution, because that's consumption across the board, across the country, not necessarily in your product category or your income group that you're targeting. So, GDP is not a number you really want to use as a.
Because there's a question here from Ranil Vijayasinghe. I think we should be getting back to the theme and bread and butter issues connected with it, like what drives GDP growth. What comprises investment as a percentage of GDP, public versus private investment, savings and FDI, consumption driven by savings or borrowings from banks, or loan sharks in villages, etc. Your response to that would be, you don't really need the GDP effect. Well, let's look at the specific things that.
Yeah, what do you want as a business? You have to, okay, you want to predict how your particular good will grow over the next 4-5 years. Trying to tie that to GDP is not going to be very helpful. We'll try to figure out what works best.
That's a theory. Let's ask those from the private sector. Do you use GDP in your planning, in your models? Per cap numbers, does 4,000 per capita, does that mean anything to you as you make your investments?
I think for us it does. I mean, I think it means something in terms of as you start to try and work out in the long run where an economy is going to, you have to have a view on the type of product that your consumer is going to want to buy, the disposable income that sits within their hand. So in a very long-term sense, I think it does. In a short-term sense, I don't think it's particularly meaningful.
But would you be looking at the consumption data?
Yes.
Trends?
Yeah.
What can be done to increase consumption? I have a question here. What can be done? You have documented that consumption has dropped. Is there anything that anybody, private sector or government, can do?
They're going to do one thing quite soon. It has now been kind of announced. They're going to cut the electricity tariffs, apparently. I think I heard some news item about that. That will push up consumption.
Okay, and who will pay for the electricity then?
You drop it far enough, your national savings go. What do you mean? Who will pay for it?
Yeah.
You start running losses and your savings rates go down because your government sector starts dissaving.
Right, and let's look at the banking implications of that. What happens to the banking sector when the government is eating up all the credit in the system?
Yeah, I think that this was a dilemma. I mean, the credit expansion on consumption in 2012 resulted in high inflation, and then there was credit restrictions in 2013. Now the rates are being brought down and to boost the consumption and promote consumption. So I think this is the challenge for the government to really understand. And I think even bringing rates down today, I think one of the dilemmas that the government is facing is a lot of people have been used to living on interest, and the pensioners and all are sort of in arms now because they cannot manage their lifestyle with this low interest rates. So these are the kind of areas the government is grappling with in terms of deciding on the interest rates.
So from your perspective, from industry, from the private sector, Stephen, you said you see a problem with people's consumption patterns.
Yeah.
People are tight for money. What can you do?
No, I don't think there's a great deal we can do about that. I mean,
there's some question here about brand names. Is it about brand names, or people are just going after discount schemes, installment schemes?
I think there's...
Is that the one that's driving whatever consumption there is today?
I think there's two things that consumers look for when times are tight. They look for value for money, so whether that's discount schemes or whatever, and they also look to brands that they really trust. It's brands that they're very familiar with and have a high level of confidence that the product will fulfill whatever requirement you have of it. But I do think I just keep coming back to the point. I think this is an income problem, and I think it's good news if the government's going to reduce electricity tariffs. I think it puts a bit more money back into the economy. I just feel that we've had a number of factors at work, as I articulated earlier, that have sucked so much spending power out of the economy. It's just taken people into a place where they don't consume, and it's. I think the data points are remarkable in terms of, if you think about real volume growth, whether it's across pharmaceuticals, personal care products, food items. I don't see volume growth at all, and that to me is just indicative of we have no spending power. And on the other side of that, you've also got, to me, the other surprise this year has been around, there seems to be very low wage inflation and low wage increases coming into the economy as well. So overall, it is feeling like an economy that's slow and sluggish right now. So I think we could actually do with a bit of an injection of cash into the economy.
So there's a question here related to wages. Public sector accounts for 15% of the workforce. With this sector not having significant wage increases, would this be a notable reason for depressed consumer spending? Elections are coming. Time for some salary increases. What do you think? Will that help?
Yeah, that would help. Talking about other data, sorry, that could be relevant. Last year, real wages, again, central bank data, if you know where to look for, real wages fell last year after substantial rise in 2012. Another thing that explains exactly what the income factors are, and that is probably reflecting much more useful than the GDP number itself. So, and yeah, you get your public sector wages up, you'll have your private sector wage demands also pick up a little bit, and we'll have a consumption boom again.
Because one of the interesting things in the years of the war was that public sector wages more or less kept up. They didn't decrease during that entire period. So you're saying the first time it has gone down in real terms. That could be.
Last 2 years, last 2-3 years, public sector wages really haven't, they've been quite restrained. I mean, one of the reasons the budget deficit has been sort of falling. So you got two sides to this thing, you want the deficits to fall, you've got, it's not an easy thing to do.
Channa, we've been talking about very sort of immediate issues. Can you take a bit of a long perspective? The role of the private sector, demographic transition that we are going through, the long picture.
I think when you look at the long term, what is very fundamental is the banking sector. And I think in the banking sector, for an investor, there are three basic pillars. One is, of course, the interest rate, and thankfully the interest rate has reduced to a sort of a competitive rate vis-a-vis the neighboring countries. So at least that leg is satisfied. The second leg is the tenor. And I think in regards to tenor, I think there's still room for improvement. Because if you're going to start a manufacturing facility or something like that, you need periods of about 10 years, and also very liberal grace periods provided for the loans you take. I don't think the banking sector, has reached that level where, liberal grace periods are offered and long-term tenors such as 10 years is freely provided. And the third element of that is the security that they look for. And even in that, a lot of developing countries at this stage of growth has looked into the cash flows and the dreams and aspirations the entrepreneurs have. Whereas the Sri Lankan banking system, rightly or wrongly, have taken into securities and pledges, and it has been virtually a pawning business done in a different form. So, so there's still two very important missing links in the banking sector to summarize that sort of notion. And it is very difficult without those two legs of the tenor and security version to really pursue your interest in manufacturing. And as a result, I think the business communities has gone back to an easy way of getting into the service industry. However, that life is also becoming very difficult because of a number of reasons. One is that there's high taxation in the system, and also it's a growing escalation of cost. Manufacturing is difficult because we have one of the highest tariff rates in the region. And
highest tariff rates, doesn't that help manufacturing by creating protected markets? So
not exactly, because you're raising your prices all the time, and distribution and everything is very, very costly today. And actually, if you get into consumer items, the other very important phenomena is the role the supermarkets play. And at least good 30% of the entire consumption is with the supermarkets. And I don't think even the data is out and freely available from a supermarket perspective. Of course, that comes from a different angle, not from a household angle. It comes from a different angle. But those data is missing, and at least 30% is represented by supermarkets. It's increasing. And also there's another form, which is the smaller supermarkets, we call the SMMTs, the small and medium scale supermarkets have emerged in a very significant way. And when you go into them, they dominate. They only allow 3 products to be there, and one of them is their products. And second one is generally a product associated with the supermarket group, either who is also manufacturing for them under their brand, and thirdly, of course, is a market leader generally. So for the small manufacturer, it's a huge challenge to get into supermarkets as well as getting into distribution, because I think if you do not have scale, you're not in the game, unfortunately.
So basically what you're seeing, there's a question here. Why do we not have more investments in manufacturing? Actual company names, Heels, Haley's, why are they focusing only on real estate and tourism? And it says, and Channa, your boss. I don't know what that means. Is it that Sri Lanka is not focusing on manufacturing? And you have given some of the reasons. So, or is there a possibility?
I think manufacturing is also very difficult. As I said, electricity components are very high. Interest banking sector is not totally supportive. However, they are getting there. But I think with the tariffs, I think there is now a lot of entrepreneurs are looking at manufacturing at this moment. So I think it's slightly ahead of time to totally say that it has been disregarded completely. For example, some of the exports that Haley's are doing, they are, in certain areas of industries, they are the best in the game in a worldwide sense. In rubber-based manufacturing and other areas that they are concentrating. So we have excelled in certain areas, but we see them in small pockets, and I think renewed effort and energy has to be put in going back to manufacturing, I think.
Rohan, if I can just interrupt.
Before you go, there's a question specifically for you. Ashok Padrage stated at a previous forum that he's betting on the 4,000 per cap. As a banker, will you back him? So combine the two answers.
Yeah, just on that specific, like any credit proposal, we will evaluate. And I believe you have to think far. I think medium to long-term thinking is the right way. I can recall in my banking days when Mahesh Amalin started his, we gave a $1 million loan in 1986, and at that time, that was a huge amount of money. So yes, to answer the question, I like, entrepreneurs who are far thinking, and we will support depending on the viability of the project. But just going back to manufacturing, I believe there are loan schemes available, and maybe you should talk to us, because we go up to 10 to 15 years tenor with we think generous grace periods depending on the viability of the projects. And there are credit lines available. We have one, we have just negotiated with the European Investment Bank, tenor up to 15 years. So I believe there are, but what we don't see today, unfortunately, is that trust in manufacturing for some reason or other, and we would like, as a banker, to support these industries. Just going back to the middle income, one of the challenges the banking sector will face, these credit lines are going to die down, because these credit lines, which concessionary rates coming from multilateral agencies on the understanding we are a low-income country. So one of the challenges we have in moving to that is banks like us and other development banks will have to go and raise funds on their own balance sheet as opposed to getting concessionary credit lines.
I actually want to ask a question from all these very important...
From the audience or the panel?
Not from the audience, from the panel, or maybe from the audience too. One is, I'm happy that we were talking about long term, but I think I want to ask what the issue of in the long term would be of unrammeled consumption growth. Because, even electricity, say reducing the prices and consuming more electricity. Our electricity is produced at a very costly way at the moment for the environment and for the country in terms of costs. So how do we actually, is there no other way than completely unrammeled, unhindered growth in consumption? We are also talking about, you talked about the banking sector. We've just done a study in the north, in Udati Japla and Kilinochi, where we realized that a lot of the lower income groups are extremely in debt and unable, because of the lack of opportunities, to repay that debt. So I'm just asking, what are the implications both for the natural limits, for for the inequalities that exist, by this complete, or at least is there another way to have private sector growth, but also to address these issues?
On electricity, let me just add a few things and then I'll turn it over to the panel. Last year we had a 4.5% increase in people with electricity subscriptions, and we had a 1% decrease in residential consumption. So that means that they're saving more. Relatively, about 1,000 sample survey that we did among micro entrepreneurs, poor micro entrepreneurs, showed that 64% of them had switched to energy saving bulbs and things of that nature. So in fact, people are responding to the price signals that they're getting, and maybe we are getting there, where you're going to have a more efficient economy with less wastage. But the larger picture from most comparative studies is that we don't use enough electricity. That's sort of the conventional wisdom, which you are challenging. You're saying we shouldn't use this much electricity.
What is the impact of that on both the environment and on inequality?
But isn't it better that we switch to electricity and not use wood?
Yeah, but electricity.
Firewood for cooking. I mean, we have switched. Quite a number of us have switched to LPG, and that's, I think, better for their health, better for everything, compared to using what doesn't appear in the GDP, which is going and getting the firewood. And that might keep some people happy, saying, oh, we don't have capitalism growing. But in fact, they're breathing cleaner air, and they're actually spending lower per joule than if they were using firewood.
The electricity is very expensive. We have oil-fired electricity.
Getting lower cost electricity. You may not like how you're getting it, but coal is lower cost electricity.
I mean, expensive in terms of the environment, huh?
Today we got both diesel expensive and costly to the environment electricity. Any comments from the panel? To Priyanti's question.
I mean, I guess you're talking about it's a paradox. If everyone in the country or everyone in the world had the lifestyles of everyone in this room, the world can't sustain it. But who are we to tell them they can't have what we have? I mean, that's sustainability of this. We hope technology figures it out. Elon Musk gets us a car that doesn't, I don't know. Whether you go into a more but it's a philosophical question. It's not, it's a bit beyond me actually.
Well, there is another sort of a long-term question which I'm still trying to focus the panel on. Someone is asking, how many households are headed by pensioners? And what does that mean? What does it mean for your thinking about the banking sector? What does it mean to you, Channa, in terms of your business planning? That we are going to have a lot of people. If you think they're retiring at 58, 60, and they're living till 77, 80, that's a good 25 years, particularly for the women. What are the implications for society and for companies?
I think logically, I mean, the consumer, any industries which are focused on consumers, is virtually banking on it. Drug manufacturers are reasonably excited, and distributors are excited. So in terms of, I think opportunities, they are looking at it. But I think, again, I like Priyanti's question, and I'll step into that for just a minute. I think, what the country requires at this moment of time is entrepreneurs. We require a strong level of entrepreneurs to come. I don't know from where they will come. I hope they'll come from the villages. They'll come from rural areas, because rural areas and villages have been always thought of as the bottom of a pyramid to be exploited. And most companies, I won't say all the companies, some are very responsible companies, but some companies have looked at them only for employment. virtually at the shop level. There have been stars which have come out of the shop level to take very high senior positions, but most of the companies have looked at them as pure labor workforce at the bottom of the shop level. So I think a renewed effort has to be put in with a new mindset, with a new degree of interest and enthusiasm to look whether there is stars at the rural level, at the villages. Are the bright students coming? All the 4 A's, and if all, whether it's O level or A level or the university, the best of material will come from rural areas and villages that none of us has ever heard even. That is the wisdom which is emerging out of this country. So I think as corporates, we have a responsibility to tap onto those sources of energy and opportunity and the future. And I hope corporate Sri Lanka will step onto that, while the banking sector will really support entrepreneurs because some of these entrepreneurs will have no base. They will have no big corporates can go to some of the better banks and negotiate 10-year loans, give a track record, show what they've done in the last 10 years and borrow. But some of these entrepreneurs, started from nothing. It's a dream, and they've woken up to a dream, and they're excited, but it has to be really funded. And I hope the banking sector as well as the responsible corporates will step into this, for everyone's interest.
Let me ask you, each of you, 1 minute, if you have any closing thoughts, one takeaway that you want to leave with this group. Shall we start with you, sir? Is there anything you wanted to say and couldn't say, or you learned from this exchange?
Yeah, I think maybe I'll just answer that question whether the banking sector is extremely conservative. I think I don't really think so. If you look at our non-performing assets, the figure, it just shows.
That's in the commercial sector or the state-owned banks?
No, in both.
Oh, really?
Yes. So no, but I think the takeaway is I believe there is a great opportunity for Sri Lanka going forward. And yes, I think the numbers today are looking a little depressed. But when I look at the overall strategy and the thinking, I'm of the view, there is an opportunity for all of us here.
Stephen, you had your say. I'm giving you another one.
Yeah, I guess 2 points. I mean, I'm with Arjun in my long view is a very positive one. But what I would want to go back to is just one of the topics we were discussing earlier around non-communicable disease. I think it's potentially a disaster. And I think we really need to up our game when it comes to non-communicable disease. We need to heighten awareness significantly, because when you think about the impact of non-communicable disease, because these aren't diseases that you take a tablet and you're well tomorrow, you take a tablet for the rest of your life. There's a huge cost to that. And also the nature of these diseases is that they're debilitating. So as a result, you're taking economically productive people out of the workforce as well. So I think, aside from the human side of it, purely from the economic side of it, there's a real argument for us to up our game when it comes to non-communicable disease. And that includes everybody in this room and everybody on this panel.
I think we'll have to look at that in relation to other similar performing economies before we raise the red flag.
The data's not good
They
here.
are bad, but are they
not
bad compared to people in similar conditions?
I would push back and say, I care compassionately for the people of the country. So therefore, I've got to have a response that's very, very Sri Lanka focused to this. And whether somebody else is worse or better kind of doesn't really get me that uptight. We've got to do something about this, because the incidence levels here are worrying.
Well, I like the statement of a responsible corporate sector. And I think if we can take that into heart, I think that will be really very good. I'm not saying there aren't responsible corporates, but I think there is a need to think a lot more about some of the social stresses that we saw, not to sort of put our head under a be ostrich about it. So I think what I like very much about what I heard today was the fact that we can develop a responsible corporate sector.
Amal, somebody is asking for predictions
work
of the future. You might make
come
some
and
money.
chat with me afterwards because it's too much to talk about right now. But just a closing thought. When we're looking at any of these things, it's good to know why we are looking at it. It's pointless to try to ask a prediction, give me a prediction of GDP growth for the next 5 years. I want to know why do you want it? Same question. You want consumption to grow in the longer term. It's good to think, why do you want consumption to grow? Question she asked. And overall, like you said, the social stresses are extremely important. And as we saw over the weekend, I think these are all related. So understanding the why behind why we are trying to figure this out is extremely important rather than just looking at numbers. Why is it that you're looking at the number?
You have the last word, Himad.
Yes, the last word. So let me, the area that I know is FMCG, so just looking at opportunities, clearly we see, as I mentioned earlier, there is obviously, the fragmentation is there because there are a lot of segments that are emerging and there are a lot of opportunities in each segment. That is in terms of opportunity. But having said that, when we talk about the corporate responsibility, I also want to mention while we talk about these lower SCCs emerging, they are coming up in life, there is very clearly a disparity in income. You may be surprised to know, though we capture 40 odd branded categories, sometimes we get diaries from rural areas. The only two categories we see in those diaries are tea and sunlight. So to us, these are, as I said, essential, non-essential. There is a lot that needs to be done to elevate this living standard of a huge chunk that's sitting out there. So I think we all have a great responsibility towards them. While we think about long-term, as of now, we do have a situation like that.
So let me thank the panel for what I hope has been, in your minds, a interesting discussion of an important topic. Lakshman, all yours. Thank you.
Ladies and gentlemen, I would like to share a message from our principal sponsor, Mobitel. Mobitel Business Solution is a dedicated division of Mobitel formulated to assist the corporate clients with unique ICT solutions. You probably have seen the brochure left on your chair seats, which explains the different aspects of services provided by Mobitel. Embraced with mobile technologies to realize their fullest business potential. Let's pay attention to this brief video from Sri Lanka Telecom Mobitel. Mobitel commercial.
At Mobitel, we know you're constantly looking for ways to improve your company. That is why we offer the most effective tailor-made solutions available. Mobitel Business Solutions are designed to fit your requirements and accelerate your business performance.
Do you know where your fleet is? Are you convinced that your company vehicles are being productive? If you're tired of losing track of your company vehicles, M-Track is the answer. Our innovative service allows you to monitor the movements of your fleet simply through GPS tracking. This user-friendly service provides comprehensive fleet management and asset tracking solutions by fetching location information through GPS technology and allowing your fleet to be tracked on a digital map. Now you can keep your trucks on track. Field staff are always out on assignments. While this is an integral part of any sales role, we understand that it's hard to keep track of your employees during their workday, especially when they're on the move. Since monitoring is critical for satisfactory levels of productivity, try mLocator. It enables SIM tracking and keeps you updated on your employees' locations at all times through GSM technology. Is your fax machine weighing you down? Say hello to Fax on the Go. mFax enables you to send and receive faxes anytime, anywhere. Waiting for faxes at the office takes a lot of time out of your busy schedule. Wouldn't it be amazing if faxes were accessible to you wherever you went?
Although most meetings are important, attending them takes a lot of time out of your day. Time is money, delays and absences are detrimental, and meetings are easier to organize when you have your boardroom on speed dial. This is why we've created mLink, a quick and effective toll-free conference call service with multiple participants. It even has recorded playback for your convenience. Events are hard enough to coordinate without having to worry about attendance. The cost of an unsuccessful event is a very high one, and that is why we have created mEvents, a broadcasting program that enables live streaming of your corporate and personal events to anywhere across the world. Access is granted through password for selected participants, and this is ideal since you want your event to be exclusive.
Education is extremely important for career shaping and development. Access to the courses of your choice may not always be available, and this could prevent you from learning and achieving your full potential. With mLearning, you can conduct corporate training seminars for your staff from anywhere. This ease of access allows for cost cutting in terms of travel expenses and time spent. Are missed calls and opportunities eating into your bottom line? It's a waste to lose out on potential profits. No more missed opportunities with our 24-hour call center solution. We enable mobile call center solutions around the clock, ensuring that your customers' calls will always be answered, increasing business opportunities and productivity.
Fuel allowances are a must for any company with field operatives, but the paperwork and procedures consume both time and money. With the mFlash card, managing staff fuel allowance is a breeze. The system provides you real-time updates and SMS notifications with complete control of the usage. So sit back, relax, and let the card handle it. The back-end system is vital for any business organization. Records of transactions are maintained online for convenience, but isn't it a hassle to wait until the end of the day to manually update records? Wouldn't it be better instead to avoid unnecessary duplication of work and receive updates then and there rather than wait till the close of business? Let mMaps handle all those last-mile tasks. With real-time integration to your back-end system and a choice of devices, our apps take the manual workload off your work hours. secure is your organization? Are you certain your assets and the safety of your staff is assured? Be on the watch constantly with our security and surveillance solutions. This security system allows individuals and companies to monitor their assets in real time from any part of the world at any given time through devices such as your phone, laptop, or tablet. It even has recording facilities which can be used for playback purposes.
Are you tired of carrying all your cards, chits, forms and receipts with you? Not to mention the hassle of replacing them when you lose them. The Mobitel iCard acts as your corporate ID, allowance card, access control card and attendance monitoring card. With Mobitel iCard, all you need is one card.
Connecting you to a world of opportunities, Mobitel provides solutions that are personalized, efficient and effective to reach your maximum potential. Contact our solutions consultants now. Mobitel Business Solutions, accelerating your business.
Lanka, can I have the screen, please? Himali mentioned that it is a duty of all of us to help the people who are less fortunate than we are. Please bear with us, and I would like to request your attention for 2 minutes to hear from Dr. Ramesh Gunasekara, consultant plastic reconstructive and hand surgeon attached to Lady Ridgeway Hospital for Children. He also leads the organization Cleft Lip and Palate Association Lanka, Cleft PAL, also known as Cleft PAL. Beneficiary charity of today's forum is this organization. I would like to invite Dr. Ramesh Gunasekara to come and speak a few words.
Thank you, Lakshman, for the opportunity. Well, I was trying to figure out how to relate to this organization. I guess I could call myself the CEO of the plastic surgery department at the Lady Ridgeway Hospital. And my business is to make normal those unfortunate to be born like this. So Sri Lanka has 350,000 live births a year, and 600 children are born every year with clefting like this in one way or the other. And this is a huge burden. And at the Lady Ridgeway Hospital, we operate on about 350 children, but that is not enough. So we have a waiting list of at least 200 or 300 children who are yet waiting to be operated on. And this is a huge burden. It causes disfigurement, they have speech problems, and they are unable to integrate into society later on. If we operate on these kids in time, then we can give them a future, a life, prevent them being ostracized from society, which is a great opportunity for us. So, in the next week, starting on Saturday, we are hoping to, with the help of a colleague of mine from the UK, we're going to operate on 40 to 50 kids working after hours at the hospital. So using the facilities of the Lady Ridgeway Hospital, we are going to operate on 40 to 50 kids. And for this, we are going to be using off-duty staff, which means we are going to have to make payments by consumables. And we believe this we have costed in the past. It costs about 25,000 for a child. So what I would like to ask you is to try to help our organization, which is Cleft PAL, to bear with this cost and help to put a smile on the face of these children and a future. Thanks. Thank you.
Thanks, Ramesh. There is this leaflet which we will distribute, and I don't think we have enough leaflet for everybody to take home. But we will be sending you. We'll connect you with Dr. Ramesh Gunasekara over email. So we appreciate if you could make contribution. So as Doctor said, it's 25,000 rupees for consumables and extra labor that need to be paid for the minor staff, the assistant staff, etc. So you will make a child future wonderful by just making a small donation. So thank you so much, Doctor, for being here with us today. Let me quickly wind up today's session, conclude today's session, and invite you for the most interesting part of the day, that food and drinks. Priyanti, once Margaret Thatcher said, if you want to get anything done, get a woman. Now, I know why Sri Lankan parliament is dysfunctional. According to Priyanti, only 6% of our parliamentarians are women. So that probably is a problem. So thank you so much. So what we try to do today is there are contradictions, there are conflicting signals coming from the economy and contemporary society of Sri Lanka. And how do we make sense out of it? And how do we make use of these trends, this information, these signals in our immediate business planning, as well as in the long-term perspective, okay, how do we factor in these trends in long-term business planning and relooking at our business models and operating models. So what we try to do within 1.5 hours is to try to get some kind of discussion going on. So there's something for everyone to take back and start practicing and perhaps start thinking about our business strategies in a slightly different way. Thank you so much, Himali. I know that you worked really hard last couple of weeks, analyzing your wonderful data. LMRB household panel, which gives you, wonderful database about, 25,000, going back to about 25 years. And I'm quite happy to see that, okay, we harvested that information for something like, more business strategy planning rather than, marketing and brand planning. Thank you so much, Himali, being here with us today. Thanks so much, Amal, helping us to understand what these macroeconomic indications really indicate, and what lies and how they segregate and how we interpret, and helping us to understand what are the social trends and what are the weak signals and what are the strong signals, what are the qualitative signals we see in the society. Thanks so much, Priyanti, for being here with us today, and Stephen, joining us once again at CEO Forum. I believe this second or third occasion you are with us on this stage. It's wonderful to have you with us. And Channa, I believe you are also, third or fourth, second or third occasion with us. Previously as SEC DG, and then of course now as a leader of a leading conglomerate. Arjun, thank you so much sharing your views and representing leading bank of Sri Lanka today with us. And Wahan, a big thank you for all this. Wonderful to have you with us. Hope to see you again pretty soon. Thank you so much. Please put your hands together and thank our speakers. Please join us for food and drinks, and please remember to collect this leaflet and also to contribute to Dr. Ramesh Gunasekara's contributions. Please have a pleasant evening. Thank you.
LBR